There is some optimism around a comeback year for deal making. According to a recent KPMG survey, 2/3 of M&A decision makers expect more deals this year compared with 2023. But our next guest says there are some wrinkles still left to iron out. Joining us now is Kamran Ansari, venture partner at Headline. Kamran, it's good to see you again. So when we talk about M&A here, we've talked a lot here about some of the regulatory obstacles, but maybe there's some others as well to the floodgates opening this year. What's kind of tops on your list?
Sure. I mean, look, it's been a tough year for M&A in 23. It was down about 17% globally to 2.9 trillion from the year 2022. And, you know, M&A stands for mergers and acquisitions. It might as well have stood for meager and absent because there are very few deals, in particular in the tech sector, smaller deals, notwithstanding the largest deal that was announced at the end of the year, that was Cisco attempting to buy Splunk, which hasn't closed yet. But regulatory is the biggest issue. I think it lacks, creates a lack of predictability. And the regulatory scheme has gotten even more complicated now that you have 4 or 5, 6 bodies you have to go to. It's not just the US. In the US, you have both DOJ and FTC. And then you have the UK with Brexit, EU, in some cases China. I saw a deal where they had to go through the Saudi Arabia antitrust group. So depending on how many countries you're operating in, and for most tech companies, it's going to be probably 50, 100 countries that they're in. You're going to have to go through a lot of regulatory hurdles to have a deal go through, which is why you're seeing mainly private equity buyers in the market in the tech space.
And Kamran, I wonder if another issue is just how long it can take to get these deals done. I mean, you think about Microsoft and Activision, Kamran, or Broadcom, VMware. I mean, these deals can take years at this point. I wonder how many times you might, a CEO is thinking, a deal makes sense, but then starts to think through how long it's going to take to get this thing over the finish line, just says it's just not worth it.
Absolutely. Look, I mean, as a venture investor, and if you're on the board of one of these companies, if you're a founder, you have multiple paths for exit. You can do an IPO, you can do M&A, you can do a recap with a private equity firm. And at this point, the corporate M&A route is probably one of the least desirable, just because of the fact that, like you're saying, it could take forever. There's a lot of risk, it lacks predictability, and the time and cost. I mean, you might be stuck in a process for 12, 18, 24 months and then not have it work out. And I've been in that movie where you go down the road. A company called Billy, which Procter & Gamble tried to buy. We went, in the process for probably 12, 18 months before the government said they couldn't. And then Schick, another buyer, was able to come in and buy it. So we weren't exactly sure why one was allowed to and one wasn't. Is a sort of, a bit of a parlor game to figure out exactly what's going on. But that, gives you pause. And so you think, well, if there's a private equity buyer, a financial buyer that can come in and give us a similar return with far less risk in terms of closing, that's a better outcome. And that's why, the private equity guys have been cleaning up on the public markets, buying all the good software companies that they could afford kind of between that $1 and $10 billion range. But I think that's going to slow down too, because all the best ones have been picked off. And now the ones that are left are kind of the larger ones that are probably too big to buy unless you get a big consortium together.
Well, and even the private equity guys weren't super active in 2023, right?
No.
And then the other option that you mentioned, the IPO market, well, that hasn't been so open either. So what happens?
That was even worse.
Yeah, so what happens this year, I guess, to these sort of richly valued, or at least large, privately held companies that are looking for that exit? Do they just have to wait longer?
I think there'll be some waiting. I think you are going to see the IPO market pick back up, particularly because the last kind of 4, 5, 6 months of the year, the market was doing much better. And, it's been a choppy couple of days here in early January. But most folks, given what the Fed's about to do in terms of probably pausing and maybe even cutting rates, inflation having been sort of curbed for the most part, you're seeing more optimism around deal making. I'm seeing it on the venture side with term sheets going out and companies getting funded. So I think that you're going to see some of these IPOs that have been in the kind of waiting room for a long time, Databricks and Arctic Wolf and Intercom and Reddit, and the granddaddy of them all, Stripe, if and when they come out, probably maybe at the end of the year, even 2025. I think you'll see these other guys start to come out, and there'll be a thawing in that space. On the M&A side, I think the tech market is going to be slow still. I mean, what's the last deal that you saw Google or Facebook or Apple, one of these guys do? Because they're just, I think, too reticent to do a deal given the antitrust risk. And the only one of the large tech companies in the US that's been active is Amazon. And they've been buying non-core assets, things like MGM Studios or Whole Foods, which are far less likely to get blocked in terms of antitrust.
And Cameron, I'll get you out of here on this. You're a venture investor, so you're meeting with a lot of smart, hungry entrepreneurs. As we start the new year here, Cameron, any particular verticals or sectors that you're finding especially interesting here?
Sure. Well, look, in the spaces I invest in, which are mainly fintech and e-commerce, in the fintech space, we still think B2B payments is really the area that's been underserved and underpenetrated. The only real B2B payments company at scale that's out there and is public is Bill.com. There are a handful of others that are smaller, but most of the big scaled companies you think about that you've heard of in the fintech space, like PayPal and Stripe and Square and Venmo and all these businesses, they really enable consumers to pay businesses or consumers to pay each other. They don't help businesses pay businesses, and that's a much bigger market than all of those. So I'm actively looking for companies in the B2B payments area, and that's a space I think is going to be very active this year.
Cameron, we always love having you on the show. Thank you for your time. We'll see you soon.
Thank you. Happy New Year.
You too.